Hello, everybody. Welcome to today's fundamentals. Hello, Peter.
Hello.
How have the markets been behaving?
Well, there was low volatility in the markets, yes, in the FX market. The US dollar remained rather inactive. That also provided a chance to gold to jump a little bit higher. I would note, though, that yesterday we had the release of the ISM manufacturing PMI figure from the US. That was for October. It came out better than expected. It was above 50. And that tended to imply that more or less economic activity in the US manufacturing sector continued to expand. That was a positive. Also, I would note that we had the JOLTS openings, which were also higher than expected, which tended to imply that the tightening of the US employment market is still present. Now, this could go out twofolds. On the one hand, we have the Fed's interest rate decision today, which the bank may take that into consideration as well. While we also note that could also have an effect on the US employment report, which comes out on Friday. But we have to note here once again that the JOLTS job opening figure was for September, the employment report is for October. So overall, I would expect that the market maintains a wait-and-see position.
And what about US stock markets?
Well, US stock markets dropped slightly for a second day in a row. And I have to note here that the earnings reports, which we had singled out, especially we note that GlaxoSmithKline Pfizer yesterday was better than expected, both on an EPS level as well as on a revenue level. And overall, the market sentiment seems to remain rather muted. Today, I would be noting the release of GlaxoSmithKline of the earnings report, as well as, if I'm correct, Booking.
And I understand that today the Fed is to release interest rate decision, right?
Yeah, it's interest rate decision today for the Fed. The bank is expected widely to hike rates by 75 basis points. It's characteristic that Fed funds futures imply probability of 98.4% for such a scenario to materialize. The big question is, should the bank actually deliver the rate hike as expected, is the forward guidance of the bank. Will the bank actually signal that it will slow down its rate hiking path or not? The market, for the time being, expects the next rate hike to be of 50 basis points, and that would be in December. It's characteristic that Fed funds futures, once again, imply a probability of around almost 60% for such a scenario to materialize. So that's the main expectation of the bank, that the bank will perform a lower rate hike in the next meeting. On the one hand, given that the last dot plot of the bank had indicated that it will come practically to a halt regarding rate hiking in the summer next year, at some point it will have to start slowing down the rate hike path. And should it decide to do that or to make a start with it in December, it has to start preparing the markets for such a slowdown from this meeting. On the other hand, though, we have inflation which remains at pretty high levels. We have a rather tight employment market, at least for September we had. And both of these factors tend to push the Fed to maintain its aggressive stance regarding rate hiking. So should the bank actually deliver on the market's expectations, i.e. deliver 75 basis points rate hike and at the same time signal that the next rate hike may be lower, that could weaken the US dollar, while at the same time may push US stock markets upwards, as that would imply that the possibility of a deep recession in the US economy is slowly fading away. On the other hand, should the bank maintain a decisive tone, a hawkish tone, and take the markets by surprise, we may see the US dollar gaining asymmetrically, and at the same time we may see US stock markets tank.
And what else is on the calendar for today?
Well, we have in the beginning of the American session from the US the ADP employment figure. The ADP employment figure is expected to drop, and if actually so, could weaken the US dollar. There are a number of traders which look at the ADP figure as a precursor for Friday's NFP figure. I would note though that the drop of the ADP figure has not started now. It's something which has been ongoing for the past few months, and it's indicative of the employment market in the private sector. Other than that, I would also be noting in the American session for oil traders, the EIA weekly crude oil inventories figure. We had yesterday, just before the Asian session started, the release of the AP weekly crude oil inventories figure, which showed a substantial drawdown of around minus 6.5 million barrels. Should that be confirmed also by the EIA, that would imply practically a tightening of the US oil market, which could provide a boost on oil prices. And last but not least, during tomorrow's Asian session, we get from Australia the trade data. The trade surplus is expected to widen. And if actually so, that would imply practically that the Australian economy benefited more from its international trading activities, and that could provide a boost for the Aussie.
Any final comments?
Once again, the key for the day, both regarding US stock markets, the US dollar and the FX market, I would be also adding gold as a precious metal. All these three trading instruments would practically be affected by the Fed's interest rate decision. So it all comes down to the level of the interest rate hike, which is expected to be of 75 basis points. B, the forward guidance. Will the bank actually signal that it's about to slow down its rate hiking path or not? And C, I would be also noting Jerome Powell's press conference half an hour later, which practically could extend the volatility for the markets for about an hour.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
So that's the reason why things very right. You are doing
So welcome
right.
to the technical
A
analysis
safe.
part of the presentation.
This
of
anti-martingale,
Yosef,
you are risking 1%.
market analyst with IronFX.
Only
In front of your
1%.
screens, you have the 4-hour chart of
So you
the
buy one
US
lots, you move up,
JPY. I
you
was just
cut
working on
your
it. Mind you that
cuts
all
your next
charts
lot
which are to
size
be
by
presented
half.
today are to be of the
So
same
if
time
the
frame,
event's
i.e. the
price comes
4-hour
down,
time frame,
you can
unless
break even
otherwise stated.
because your one lot buy is able
I
to
have
cover
made
the
some
0.5 lot buy,
readjustments
which is going up. But instead
in
it comes down, you break even nicely.
USDJPY's
So you buy
resistance support
0.5 lot,
lines
price
already
continue going up.
to save us some
You
time.
buy
Practically the
even smaller,
movement of the pair for the past,
0.125.
I
And
would
then if price
say,
comes back
2
down
days,
here, same thing, 0.5 lots
has created
is able to
neutrals and new
break
peaks,
even.
which should be taken
And then you
notice
would have
of.
made
The
money
first
using
one
on the one lot
would be
all
the
the way up.
147
So I know it's a
support
bit
line,
confusing, it's a bit
which the
messy.
pair has been
But
constantly
yeah,
testing
martingale,
since yesterday.
unless you are very, very good at risk
So I'm
at your
keeping
risk
that as the first
management
support line.
and your directional
And it
bias
seems
is
that the
right, yeah,
pair
you can make a lot of
has
money.
hit the floor.
But if you are wrong, you are just continuously going to lose money.
The second one would be
So
the
price continues going up, you halve your lot size. If it comes down, like in this
145.50, which
situation,
remains active,
you
and
would
the
have
third one, the
broken even for
143.50.
this buy and
Before
this
that,
buy.
though, let's
This buy will
start
have been a
also with
losing
the
trade, but
152
this one, this
resistance line in red.
0.125 lots is able to break even your trade right here. And yeah, that's the reverse
Okay,
martingale.
let's make the readjustment.
But what
also on the
people normally
labels.
teach is you just double your lot size, double it, 1 lot, 2 lots, 4 lots, all the way until you make money. So what are the limitations of
And
the martingale
150.
strategy? As just now I did mention, your amount invested can reach huge proportions after a few transactions. It works very well. I need to emphasize this once again. It works well in a trending market.
And 152.
So trending markets. So price is going down. You think the market is on a bearish trend. So you continue doubling on the sell. So it works well in a trending market. And if your account has infinite money,
145.5 in the second support line.
that's the reason why a trader runs out of funds. They keep doubling until they get the margin call. There is no free margin anymore to enter your trade. And then the trades get exited, not by you, but
and the final support line being placed at 143.
And you have no money left. Your losses phase can be disastrous, can be very, very huge. And the risk to reward ratio is not reasonable at all. So just now I did mention about the coin flipping game. So you just flipping your coin non-stop and double your size until you make back your original
as long as it respects,
that you are looking
or
for.
if you prefer, remains between the 147
so high amounts are
support line
spent
and the 148.
and keep losing until you win.
Line. That would
to
be
earn
the
back
S1
everything.
and the R1.
The
On the
final
other hand,
profit is
though, I
only
would be
equal to
noting
the
that
initial
price action
bet size. So it's a very,
has
very,
forced the RSI indicator
I wouldn't
to
say it's a bad method. It
below,
works well
clearly
since it
below
works
the
well in
region
the
of
trending
50,
market, but it's as
which
good
may
as you
imply
are going
some
to a
bearish
casino.
tendencies for the pair.
It's as good as you are
In
going to a
such a
casino.
case, we
If you
may see
lose,
the price
you lose,
action,
you are playing some kind of slot machine. Lose
clearly
money, you double it to earn it
breaking-
back, and you double,
that's
and
it.
that's how many people
clearly
go
breaking the
bankrupt
147 support line
and
start
owe
aiming for
money to the banks. They
145.50.
owe money to the banks because they keep borrowing
On
money,
the other
keep
hand,
doubling,
should
trying to earn
the
back
bulls regain
what they have
control,
lost and get
we may see
into
the price action
deeper
bouncing on the
depths.
S1. Aim, if not break the
So far, anybody has any
148.80
questions, do let
and
me
start
know.
aiming for
Any
150.
questions at all? Or do you guys use this martingale
Once
method?
again, for the time being, we maintain a bias for sideways movement of the
Do
pair.
let me know if you
Yet
guys
some
do
bearish
use this
tendencies
martingale
are
method,
becoming
or you
more
guys
and
are
more
planning to
evident,
use.
and the possible bearish movement
I'll
should
go
not
on
take us
to
by
the
surprise. On the other
charts.
hand, definitely the Fed's interest rate decision, should it weaken the US dollar,
Let me move on to
we
the
may
charts.
see USD JPY jumping.
Okay,
So
let me load
practically all three
my
options are
webinar
open.
slides.
Let's have a look at USD index. USD index, which practically hit a
Okay, let me look at the euro
ceiling on the
dollar.
111.50
It
resistance
might
line,
have something.
edged lower since then. Had briefly broken
Okay,
it, but
looking
quickly
at the daily.
back
Let's say
under
you are just looking at the
and
daily.
would
You don't
maintain
really know how
also
to trade.
sideways
Let's have
movement
that
for
in
the
the current
index between the
situation. So you
111.50
can
and
see
the
clearly
110.70.
price is
A movement which
in a
may be somewhat fragile, yet
bearish trend.
I would note
Bearish
that
trend, price is going down,
we
but
may
let
see
me
the
get
price
the
action
fit
easily
channel.
rising should the Fed's interest rate decision actually
Okay,
excite
this is quite
traders
messy.
and we may see the index breaking above the
I'm not sure why, but it's quite
111.50
messy.
and start aiming for 112.40. That's for a bullish scenario.
Never mind, I'll just
On the
draw
other
a
hand,
chart
should we
using
see the bears take over, we may see the price
Okay, never mind, I'll
action
just use a
breaking
trend
the
line for now. I want to
110.70
use the
support
fib
line
channel because it looks better,
and
man.
start aiming for the S2
Yeah.
the 110. There is a catch here.
So I draw the
And the
fib
catch
channel
is
up,
that
and we are
one
in
may
a
assume that
bearish trend. So resistance line.
should the Fed continue to
Resistance
sound
line.
hawkish,
Just remember, if you
fail
want
to
a
actually
very
signal a
trend
slowdown
line, it must
of
have
its rate
at
hiking
least
path,
3 touches.
the
So what do I
market
mean by
reaction
3
will be
touches?
X to the
So
upside,
you have the first
while
touch
should
right here.
the Fed actually signal a possible
Let
slowdown
me
of
draw
its
it
rate hiking path,
clearly, everything nicely.
the
We
market
want it
reaction
very
would be X
proper.
to the downside.
So
That may not be the
price,
case.
1 tap,
We may see
2 taps, and 3
a
taps.
bullish
So this is a
reaction
valid
being
trend line.
asymmetrically
Next,
higher
we have at the bottom to
than,
confirm it.
say, for example,
1
bearish
tap,
reaction, as that may
2
take
taps,
the
3
market by
taps,
surprise.
4 taps,
The market
5
has
taps.
already
This has
not
a
largely
higher
but
confluence.
partially priced
Very,
in
very
the
high confluence that it
possibility
is a valid
of
trend
the
line.
Fed actually slowing down its rate hiking path. So I would expect the
Okay, let me
surprise
clear
for the
this out.
markets to be more in the possibility
Okay, so you
that
can
the
see
Fed
price has already
does not
broken
signal such a
this
slowdown.
area, so we are not touched that.
That the
Let's move
Fed
back
actually
to
remains
martingale
very
strategy.
hawkish
So it works
and
well. It
allows
works well
for the
if you
scenario of a
start
75
to
basis
sell.
points rate hike
If
to
you
be
get your
repeated also in the December
directional
meeting.
bias right.
Such
So I'll just write it down on the chart.
a scenario
you
could cause
Go up, you
the US
sell.
dollar index not only to break the
Sell
111.50
1 lot.
resistance line and start aiming for the 112.40, it could cause the US dollar index to also
Sell
break
1
the
lot. Let me change
112.40
it to
and start
20.
aiming for the
So you sell 1 lot,
113.45.
then you sell 2 lots.
Let's have a look now in the case of a bearish
Although it's not
reaction.
the perfect
Say the
entry,
US
so
dollar
you sell at the
index
bottom, sell 1
weakens,
lot, sell 2 lots, and
and
sell
that
3
could
lots.
cause the USD to break the
4 lots, I mean. 4
110.70
lots.
and start aiming for the 110.
8 lots.
Okay, let's have a look at Euro USD.
So you're just doubling and doubling, trying to, there are many people on YouTube, all those forex gurus,
Euro
they like to
USD,
say, oh, you
which
can double your
found
account,
the
let's do a
floor
challenge.
at the
Challenge yourself to from
$0.1975, it
$100 to
bounced on the support
$1,000
line.
account.
It was
And
tested
$1,000 they
actually,
ask you to make
could go a
10k.
little bit lower,
And
but
from 10k they ask you to
overall
make
I think
100,000.
PS1 held its ground.
Think about it.
Keeping it.
$100
And
to
now we have a catch here. On the one
$1,000.
hand,
Let me write it out on the chart to get that into perspective. $100
we have a pair
turn
which is
into
marking
$1,000 account challenge. All these
Sorry.
kind of challenges is like nonsense, man. So you're actually trying to
me
increase
delete
your
this.
account size by
Now the pair is marking
1,000%.
lower peaks.
1,000%. The
lower
only way
troughs.
to do that is to double up.
On the other
You
hand,
can
we
do
have a
it
support
on the
line,
martingale strategy. Very, very fast your account if you're right.
which seems
You
to be
can
holding.
make a lot, triple your account or 10
So
times
we
your
have a
account if you
downward
want using
triangle,
martingale
which tends
strategy.
to imply that
So this challenge
ultimately the price action
is like
will
very, very
drop
high risk.
below the 0.9875 and
So yeah, that's
start
the reason
aiming
why
for
I mentioned
0.9755. On the
always
other
only
hand,
risk
the
1%.
RSI indicator below the 4-hour
So let's say you are
chart
risking 1% of
remains pretty
$1,000.
close to the reading of 50. It's actually right
So
now
let's say
at
we have a $1,000
46.7.
account
Sorry, 0.3.
in play. Or say what? Okay, or shouldn't say in play accounts.
I wouldn't be so
Used
quick
for
to
trading.
switch my bias for a sideways movement
So we want to
in favor of a
risk
bearish outlook
1%.
just yet.
So let's say you
On the other hand,
you'll be thinking, oh, maximum I want to do
once
3
again, the
sales. I want
uncertainty
to sell
which
3
could be
times only.
caused
So if the
from
3
the
sales
Fed's
didn't
interest rate
work out,
decision
I
today
want
could
to
alter the
get out of the trade.
direction of the
So
Fed.
this I'll be showing you guys
Either way.
anti
So
martingale
should
strategy.
the US dollar start
So let's say you
weakening
want to sell 3
substantially, we
times
may
or
see
maybe
Euro USD
3
rising,
times.
breaking above the downward trend line,
So you divide it out.
breaking definitely
Each
the
time you
one
enter,
parallel level
you're
resistance
risking.
line and
So this one
start
should be
aiming for
4.
1.0090 resistance level.
Wait, let me do a
On the other
calculation.
hand,
4,
should
2,
the bears take over, we may see the price action
maybe 3.
dropping, breaking the 0.9875 and start aiming for 0.9755. A sideways scenario could occur should the price action of Euro USD remain
0.1%.
between, or if you prefer, confine
type it out.
itself
Please.
between the
0.1%.
0.9875 and parallel level.
Yeah, so it's a bit complicated.
This.
Risking 0.1%. Moving on to risking 0.2%.
Let's have a look at
0.4%
GBP/USD. Also in sideways movement.
Next, you move on to
the levels
risking
just a bit.
0.4%.
Once again, there seem to be
so total you add up
lower.
What's the total so far?
While the pair seems to be failing to actually mark lower choose, unless you count this one.
So including all your other commissions and stuff,
so
add up, it should be around 1% or close to that.
Okay.
So in a situation where you are risking that 0.1%, let me calculate it out.
Give me a minute.
So you take your $100.
Should
you divide by, let's say you are going for
should the S1 1.1455 continue to hold its ground?
You are wrong in this situation.
I would expect the pair to maintain a sideways.
You're buying, you're doing martingale, you're trying to buy and buy and buy.
It to grow.
So this is a nice way to manage your account. Buy.
Which mind you provided substantial.
But this is only on a 1% risk on $1,000 account.
On the flip side, should we see the bulls
so
clearly taking over,
let me count $100.
We may see the price action of
your stop loss
rising.
Let's say you buy at the very bottom, your stop loss at the very top somewhere.
1855. On the other hand, should the bearish pressures, which are also already evident
you do
in the pairs
according
movement,
to your stop loss, so you buy.
We may see the price action of cable
finally on the $100 account,
0.1.1455.
But as it goes down further,
for the 1.1250, it's not even lower.
You start to lower your risk.
Mind you that
cable risk to 0.2 lots.
For today,
you move on to buying
tomorrow and on Friday. It's going to be experiencing releases which could increase volatility. I'm not saying that they necessarily
goes down
will,
if it hits your stop
but
loss,
they could increase volatility substantially for the pair, as we have the Fed's interest rate decision
the final stop loss hits.
We have BOE's interest rate decision tomorrow, and we have also the US employment
loss, and then you would only lose 1% of your account.
It's a pair worth looking out for. And
let me know so far if you
a number of times
implement this on your live trading account with your hard-earned money.
Volatile.
Do you want to do that?
Easily. So keep an eye on it.
Yes,
and should you be trading the pair,
that's smart thinking, bro.
Please do trade with a stop loss.
Do not use that on your live trading account.
At least a stop loss.
I mean, some people is working well for others. I've seen someone in real life use martingale strategy on his personal EA. Yes, these bots. So price continues trending, and he has a EA, keeps buying. So it works well in the trading market. I actually saw he made a lot of money on a very, very small account. So he basically tripled his $1,000 account. At the end of the month, is around 4,000. You can see that the price action 5,000, 5 times it. But then the following month, price reversed,
element is
and he continued losing and losing
lower
money.
Resistance line. And
yes,
the
it's
important
far
level
too
is that
risky.
these
It's way too much money. Must as well
actually are the same
go
level
to the casino, right?
and tend
go
to imply
throw your
that
money
there is
there.
a substantial
At least you might have
here. So
you might have a chance. You might not. It's the same thing here using martingale.
Bringing it down.
You're just betting that the market is trending downwards.
0.002.
So yeah, it's far too risky, Eric. Yes. So yeah, for me personally, I use something called. Maybe if you guys are interested in my own personal
we have adjusted the R1 to reflect exactly the resistance which was exercised on USDCHF's price action.
Smart money concept.
And that was
what trading method do you use, Eric? Do let me know in chat.
24th of October, 25th, and once again on the 31st, Monday.
And the others that are watching too.
So it's a pretty valid
level. Please don't be shy. Just send your trading method in chat. There's no right or wrong.
On the 1st
Every trading
November,
method
yesterday,
is subjective.
The price
There's no right or wrong.
For a brief period, was able to break below the 0.9920.
My trading method right here. So we are looking
at
the euro
in my opinion, that would be a false break. And given that we had
Okay,
consistent
I'm
support.
using this method, smart money concepts. So
and
I'll
also
just simplify it
resistance.
for you.
I
It's
still
pretty
consider the
okay.
level
I'll try
to be
simplify it
pretty valid,
as
and I'm
easy
keeping
as possible to understand.
So for the time being, we
So if
tend
you're
to
looking right
maintain a
here,
bias for
this I'm
sideways
using
movement
the
of the pair
company's
between
trading view account.
the
So on my
first,
personal
the
trading
new
view
first
accounts, I do
resistance
not
line,
use
the
any
1 point
indicators.
0030. While on the
Zero
flip side,
indicators.
we
I don't
may
use
be
any
seeing
zero.
the S1
So zero indicators
0.9920
involved. So you can
practically
see everything is
confining the
off.
price
So if I
action
turn
of
it on, you will
USD
turn on,
CHF to the
everything will turn
downside.
on. So I use zero indicators. I don't use
Once
any
again,
of it.
although the Fed could
Looking, what I like to
turn
do
the
is
direction
I like to mark
of
out
USD
the
CHF either way,
previous
and we
daily
may
high
see it,
and previous
say for
daily
example,
low.
if it
So I'll get
finds
the trend line.
extensive buying orders along
The
its
trend
path,
line. I'll just teaching you
we
guys
may
a
see
method that I
USD
use
CHF
that I
actually
managed to turn
rising,
it profitable.
breaking above the
It was a
1.0030
profitable method. There
and
is
start
no
aiming for the
indicators used.
1.0145
So when I'm marking out
resistance
the
level.
previous, what we
A
are
level
looking for is
which
the
provided
previous
resistance
daily
substantially.
high and previous
It was
daily
a
low.
beautiful reversal.
I'll type it out. Previous.
On the other hand,
daily
should the bears
high.
take over, we
And
tend
next
to
we have
maintain
the
the view that the
previous
first level to be
daily
broken
low.
would be the 0.9920. Without breaking
So
this
if
one,
that's
there is no
marked
bearish
out,
outlook.
what you want to have
The next
is a
level to be
daily
tested would be the
bias. So the
0.9840,
daily candle, you
providing
want it to move
support
up
here.
or you want it to move down. You must have a
While
bias
even
and you
lower,
must
we
have
note the
some kind of
S3
story. So I like to
0.9735,
craft a
providing
story. It's
support
like
here.
I'm drawing
For
up.
the time being, once
I like to
again,
craft a story
recap,
on
we
why
tend to maintain
price
a
did
bias
that,
for sideways
price did
movement
what it did.
between the first
So
resistance
looking
line,
to the left,
the
okay, I wouldn't look to the left, it's too
1.0030,
far.
and the first support line,
Okay, let's
the
look at a more recent area,
0.9920.
like this area,
Mind you,
this
the
area.
RSI
Why price
indicator
bounced
is
or why
at the
price
reading of
reflected
30,
off this area?
so
There
that
must be a
tends to
reason
imply
to
a rather
it.
indecisive
I always
market,
want the
enhancing the
reason.
possibility for sideways
So
movement.
if I zoom in
currently.
very, very carefully, have you guys heard
Let's
about
have a look at AUD-USD.
liquidity? So liquidity is resting right here. You can see all these wicks. This wick
Here it is.
price, what did it do? It came down,
AUD-USD.
cleared this liquidity before it continued going up.
You know what?
So I'll mark it out nicely on the charts. This is on the daily
I
chart.
think that
I'm
there
just
has
getting
been
a
a
story,
narrowing
just crafting
volatility of
things up.
substantial proportions.
So I'll draw one line trade.
And
I'll change it to
I
the
would be
sell side
correcting the
liquidity
resistance line
got
somewhere
taken.
here.
So I have a story
The
why
question
price
is whether we
bounced.
set up
If I
a
zoom in
new
very carefully, you
support
can
line
see very, very down.
at this
And take a
level.
look here.
Could be also a resistance line.
Price came down. Just imagining as the market is like a magnet coming down, just to clear your stop
Placing
loss. So
this
you have a
here.
stop loss here, you cleared your stop loss,
Making the
getting
readjustments
liquidity,
at the
cleared it out,
support level as
getting
well.
liquidity before price continue moving higher.
I will be placing
And
it
then
here.
same thing right here.
That should
Price cleared liquidity. Where was it clearing?
Okay.
Let me draw a line. Sell
Now,
side liquidity.
let's make the corrections at the
So you can
labels
see I'm
level.
not using any indicators. I'm just drawing out what I see on the chart. So liquidity was taken over here and over here. So take it as the market, same thing, came down to clear your stop loss, getting that amount of cash,
with a
getting people out of the
recalibration
market
of
before
the support and
price
resistance
continue
lines for the pair.
moving upwards.
And this would be the second resistance line, which
So with that, price continue moving upwards,
actually could
but
be placed a little
why
bit
did
lower.
price reflect? Why did price hit down? So using
Yeah.
smart money concepts, we have something called
Due to
the
this resistance level here.
demand and supply zone.
That
So
would
if I
be
draw a
the
box,
0.6545.
we get everything else. So we draw a box right here. A red box because it's a sell. So you can see price tapped into this supply zone before it reflected down, cleared the liquidity area before it continued up.
And the final resistance
So
line
same thing.
resting on this peak here.
If you want to start
would be the
going at the smaller time
0.6670.
frames, daily, price also cleared the liquidity right here. Before it
Okay,
reflected
let's have a look
down.
at the support
it tapped into
lines.
the supply, reflected down, cleared
The
liquidity
first
before
support
it
line
moved higher.
stands. The second
So-
support line now is
so,
being placed at the 0.6270.
Since we have crafted that story out on what price is doing, we move up further. So
70,
price also cleared the
75. Nice touches here.
supply,
And here it was a
the
reversal.
entire supply area before it reflected down. So adding on, there's liquidity lying down here, lying right here at the top. So it cleared, it exit out
once again.
this area going up, clearing out all the stop losses. Just imagine it
And
as
final
that
support line
before
which
touching
also
into the
marks
supply zone
the
and it
lowest
reflected
point
down.
in our
So
chart
we are getting closer and closer to
would be
the
the
story of what is
0.6170.
happening on the daily at the current market right here. Okay, so with the liquidity cleared, I'll just draw it out. Trend line. Okay, the magnet is the magnet too. I'll set this as the
that's it.
buy side liquidity. It got taken
So
out
what do we
before it reflected right
we
back
see
down.
that the price action of
So
the AUD
you guys can actually screenshot this if you are
has
interested.
been
Smart money
confined in a
concepts,
range
my
bound movement
psychology for
between
this. I like to
the
say that
0.6465
I like to
versus the
use
line being
physician.
the upper range,
By trading, I want
the upper
physician,
boundary of the range, while
psychology.
the 0.6365 support line,
Why
that
psychology?
would
You
be
must have
the
a very,
lower
very
boundary
strong
of the
mindset.
range.
So if you have a
So we
very,
see
very,
that
very weak
being
mindset and
maintained
you are using the
between
martingale
these
strategy,
levels.
as I
Also
mentioned
note that
earlier,
there is an indicator
I don't think you guys can hold a
is
trade for
near the
long if
reading
you
of
do not
50,
have
it's
a
actually
strong
at
psychology.
52.
You will be
Also, I
in deep
would be
losses,
highlighting the
continued
fact
losses,
that the
and by then
Bollinger
you
Bands
would
are
have
converging,
potentially close your trade early and
which is
potentially blew the
indicative
account
of the low
earlier than
volatility for the pair.
expected. So psychology, precision.
So overall, I
And
would expect the
market
sideways motion
facts.
to be maintained for now.
Why am I talking about
For
market facts?
me to
Why market
abandon my
facts?
sideways motion
Just like I
bias, I
mentioned,
would require
liquidity.
clear breaking of
There's no
either
argument.
the
There's
R1,
zero argument to say that
0.6465,
price came down
or
and did what it did
the
because it's clear.
S1,
It's on the market. It's on the chart.
0.6365.
It's on the chart right there. Price literally came down
Should
to
the
clear
bulls
liquidity before
actually
it
take
bounced.
over, we may see the price action
And price over
rising,
here too, clear
breaking above
liquidity,
the
and then bounce.
0.6465 resistance
So
line
what I
and
like,
aim for
what I like to
0.6545.
call this is
On the flip
inarguable.
side, should
You
the bears
cannot
take
argue
over,
the
we may
market
see the
facts
price
that is
action
presented
dropping,
itself on the charts.
breaking the
But what can be argued? What
0.6365
is not a market
and
fact?
start aiming for 0.6375.
So you know, many retail traders, they like to draw trend line. Wow, they like to draw a random trend line. They say, wow, price is going up
Okay,
here,
let's have a look at
going there, and right here, price has already broken. Oh, it's broken, it's coming down. But
use the cat.
if you take another trend
Also
line,
in sideways motion.
you draw it this way, price is
Here there was
still
a testing of the 1.3660
above.
here
It's still
and
trending.
here.
It hasn't
Slightly
broken.
higher.
So it's very, very subjective.
Given
It's
that we
not a
had
market
valid
fact at
touches here
all.
and
It's
here,
not a market fact
here,
at all, man.
I would be keeping
So,
the 1.13660
Huge issue with this is
line.
if I ask
On the other
100
hand, the
people,
1.35 was
100 people
also
sit down in a
tested,
room and ask them to
but
draw a
seems
trend
to be
line.
holding its
Say, oh,
ground.
guys, everybody sit down.
Okay, let's push
Here's a
it
pen and paper,
slightly
here's
higher.
your chart, or here's a laptop. Everybody gets a laptop, and then you draw a
Let's have
trend
a look
line.
where it lands.
Show me where the market is trending. So people will draw, wow, they have a trend line. Some people use this trend line.
Could be.
Some people draw it like that.
Because you have
and they
touches
say,
here,
oh, we
touches
have
here,
markets broken,
testings here.
market structure broken, trend line broken.
Seems good.
Or some people even use the body of the candle.
And that
Use the
would
body
be
and then
at
they're trying to move it. They move it around.
the 0.
And they can say that price just
1.3675.
reflected. They can even say price just reflected the trend line. So that's the very huge issue with drawing trend lines. It's very, very subjective. Everybody draws their trend lines differently. So that's what I like to talk about, market facts. It's not a market fact if everybody is drawing it differently, right? It's not a market fact at all.
Support line.
So what you want is the
Overall,
market fact that liquidity was cleared. This cannot be argued. You cannot say, oh, price came down to
and the S1
here because there was something. No. Liquidity is presented
for
itself
me to
on the chart. Especially right here. Liquidity cleared.
Clear breaking of the
liquidity
R1,
right here cleared before price. Finally cleared, tapped into the supply zone before
and for it to start aiming
downwards.
For the 1.3835.
Okay, moving on. Since we have got a idea on what is going on in the daily, so we have already crafted, I've given you the story, what is going on, why price moves the way it is. I want to know everything before I start trading the pair. So I do not trade multiple pairs. I only focus on the euro dollar, euro USD. So I got my entire mind. So I'm just looking at the chart. I know exactly what happened on the daily. I don't have to redo my charts. So going down to the 4 hours.
Pretty close to
maybe before we move on to the 4 hours,
cutoff point of
I
50,
spotted
which
liquidity
tends to
resting right here.
market.
Why is it
Also
resting
note
right
how
here?
the Bollinger Bands
Because
have
there
been
is a
converging.
low.
Another indication of the low
Equal low
volatility for the
candles
pair.
are liquidity. So I'll just write it out right
Let's
here.
have a look at the
in
Kiwi, which must be rising.
Equal lows. Equal lows. So I spotted an equal low there already. Moving on to the 4 hours.
And the DUSD, the Kiwi, ladies and gentlemen.
I also continue.
Against the US
I want
dollar.
to craft what is going on.
Nice
what is going on
upward
right
trend line.
there.
I would be adding that we are seeing a channel here.
So you can see right here, price, where is price currently at? What I like to talk about a lot is market imbalance, market inefficiency. So if you look at this candle, do you like it? Oh, you like it? Oh, it's just smash all the way down. Then you say, oh, I can look for a buy or I can continue selling. But with a candle that big like that, and then you still want to sell, do you think price can continue going down? No, because when people see such a candle like that, they start to buy. They start to buy up. So we have something called a retracement.
Slightly to the upside.
So using the retracement, we are looking at the market imbalance that is right here, the market inefficiency at this area. So price is currently inside the light blue inefficiency area or the market imbalance. So let me use a Fibonacci to draw it out. Let me draw it out nicely for you guys to see. Where is it? Fib retracement. Now use my fair value gap.
Let me adjust the camera.
So if you look very, very nicely, do you have any questions on how to spot market imbalance before I continue?
That should be it.
In case it confuses you guys. So market imbalance, you can see very nicely. Price is inside right now at the moment. Market imbalance is very, very useful to find out where price might potentially head to next.
Okay, so we're moving on with NZD-USD. We see that there is an upward movement.
To prove market imbalance. Same thing, it is a market fact. There is a market fact that there is an imbalance there. It cannot be argued. It's presented itself on the chart. There's no way that you can say, oh, there's an imbalance at some random area. Nobody will. It's impossible to argue on that. So you can see here, there's a market imbalance resting right here. Price came in, tap, continue going up. Market facts. Price came in right here, tapped into the market imbalance before it continue heading up. So yeah, market imbalance inefficiency is very, very important in trading.
I think it's more evident now.
I know there's something new. I don't think there are many people who talk about market facts. What is a market fact? So yeah, I like to present my trading style as market facts. So setting the market, okay, let me redraw the entire feed. So we have a market imbalance there.
And to the downside.
Can take a look. Price tapped into it before it continued
upward movement,
bouncing up.
And so next, it's characteristic
look at this market imbalance right here. Very, very tiny one.
5870 resistance line
here.
now turned to support.
Price
with the next aim being at 0.59.
And it continue moving up.
So I would
Same
expect
goes to here.
The next peak to
the huge
be
issue with this kind of trades, this kind of huge entries, is
definitely
there's a very huge market imbalance.
This peak here.
You can see right here.
If it's not,
price
then
actually came
we
in to have a minor tap before it continue upwards. But what I don't like about this market imbalance,
something which we should
about
be
this specific area, is because
now on the other hand, note the RSI indicator is tilting slowly downwards.
Mitigated.
Yet it's still at rather high levels.
So what is mitigation? What is market mitigation? I want it to at least be close to the 50% area.
It remains.
You can draw it out. Can take a look. I'm using a gun box. So I prefer it to be quite close.
A bullish sentiment for the Kiwi.
At this area, the 50% equilibrium before it continues going up. But for this case, we might expect. Should the bears
take over, I would expect the price action to drop.
Since it's not mitigated, we might expect for price to possibly, let's say if EU is continued to be bearish.
That would be
where's the forecast line? Where's the forecast?
Possibly even I normally just 0.5770, which would be marking this show here. Actually,
okay, so
for bearish outlook, I would
projection line.
That.
So we are looking for if EU is possibly continuing
once again,
bearish, we can look for price
for the time being we maintain a
Why is
bias for
this not
upward
the rights
movement,
to?
a bullish outlook,
Okay, the
which
forecast
may
we can look
push the
for.
price action
Tries
higher
to
to the
tap into
0.5985
the
resistance line.
okay, I need to hide all these
Once
text
again, though,
nonsense.
the whole
How do I hide all these
direction
source
of the
text?
pair may be
Source background,
more
none. I don't
reliant on
want
the Fed's
none of
interest
that.
rate decision tonight.
Hide all of those.
Moving on to gold's price, gold which tended to
Opacity,
gain
none.
on the inactivity of
Target
the US
border,
dollar.
none. Background,
You can see
none.
gold's price is rising. If we drill
None.
out
I
to
don't
the
want all
daily
of
chart like
those.
here,
Give me a
1, 2
moment.
green candlesticks.
Okay, with that being in place,
So there's an upward
let me
momentum.
see.
If we
Okay, there's
drill
still
into
something.
the 1
Failure
hour chart,
text
that should
in
allow us
white.
with a
I
clearer
don't want
picture of
any
the
of
upward
that.
trend line.
Okay, so forecast, it's possible for price to come down. This is on the 4-hour chart.
On the other
To
hand,
come
mind
back
you that
down
we
to
have one peak
mitigate
here and the second
these
peak
4
is at the
hours
same level.
markets imbalance that was resting right here. So I'll just write it down. A very,
Drilling
very
back
quick
out
one.
to the 4-hour
Where is
chart.
the calls? Okay. I'll name this as the H4 unmitigated markets imbalance. So right now I'm just drawing what I see on the chart, which I present it as market facts instead of using indicators.
Resistance
You
line
can use multiple indicators, moving average, RSI, all these kind of other things.
For a new resistance line,
It may
and that
show,
will be placed practically
it
on
may
this
not show
peak.
the same, sell.
In my
So
opinion.
one indicator can
On the
indicate
other
selling,
hand,
another
you may
indicator state
widen it,
buying. They are
but
just lagging indicators using
I'm not saying
calculations,
that this
using
is not a
formulas
valid
to tell
level.
you
It
where to
is,
buy, where to sell.
but
But I don't like to
think
use
we're
any of
missing
that.
out
So I would rather
on something.
look at
And that would
what
be
is
this
presented to me in
level
front of
here,
the
which
charts.
provided resistance
That's
on
what I
the
want.
one hand, however,
What
provided
is
also
presented on the charts
support
before
and
I start my
support here
trading.
again.
So with
So I
that
would be
forecast
keeping
in
it as a
play, it's
resistance
possible
line.
that
That would
price
be
might come back down to
in
clear
red,
this H4
the
unmitigated market imbalance.
1705
Well, since we are just now I did mention we are
could
currently
be higher.
in the
1706.
H4 market imbalance. Let's dive down to the 1 hour. To the 1 hour where we can potentially see what is going on. So in the 1 hour, we have actually tapped into the 1 hour. So I'll move this up. The
And that's
1
the next
hour
resistance line. I
market
would be
imbalance.
placing
You can see right here, it's very, very clean and obvious. It's very, very clean.
My bid. I will be placing it here.
So price tapped into that, just had a minor tap before
Maybe
it
even a little bit higher
rejected
to
almost
catch this
immediately.
peak.
So yeah, that's the market imbalance right there.
1735.
So tonight, later on, we have the FOMC news. So if you're trading euro dollar, you should be careful on your trading.
Let's
So
change
yesterday,
the labels.
let's take a quick look at Forex Factory. Take a look at Forex Factory. Yesterday, the construction spending was better than expected on the USD. Previous was minus 0.6%. They forecasted minus 0.5%, but it turned positive 0.2%. So it's insanely good for USD. So even the job openings was better than last month and way better than expected. Way higher than that, man. It's like plus 1 million on top.
1640 being the first.
So yeah, I was looking at these two. So these two gave the very, very good news for yesterday for USD. 10 p.m. So Euro USD plummeted with the DXY strengthening. So I'll just do a quick one on why the construction spending is very important, although it's a yellow color news. You are thinking, why am I looking at that? It's yellow color news. Why do I care so much? Well, what you are learning from, I learned this from someone who used to work in Goldman Sachs. Yeah. So this is a secret. This is a secret source. So for those who are here, you are very, very lucky to be learning. You cannot find this on. I don't think you can find it on YouTube. You don't find this anywhere. So it's a secret, although it is a yellow color news. So construction spending. Just think of it. Construction spending increased to a positive side. But where do they get the money? Builders, they need how much money to build a house? So maybe build an entire apartment, they need $1 million, few million. But where do they get the loan? They need money, right?
The failure of the
so they are getting money from the bank. They are
and
getting
that
money from the
may
bank.
imply
So
some
the bank is lending them money, but
stabilization
for the builders to build the
tendencies for the
houses.
purchase
So the
price.
builders are spending more
Nevertheless, should the
money
bulls
to build
maintain
houses.
control,
But why?
we may
Why
see
on
the
that?
price action
They are
breaking above the
expecting that
1660
they have
and
people
start
who are
actively
able
aiming for
to buy the
1680.
houses.
On the other hand, a
So
sideways
if people are
motion
able to buy houses,
may also
the banks
include
will lend the
a
people
breaking of the
money
prementioned
to be
upward
able
trend
to buy
line, which
houses,
was
and at the
formed
same
since
time,
yesterday.
they are lending both builders and people
Yet
and,
the price
and people
action
to
of
buy
gold
houses at the
remained
same
between
time.
the 1660
So this
and the
tells us that
1640.
the banks think that the economy is
For a
improving.
bearish outlook, I would
So
require
yeah,
clear
construction
breaking of
spending
the upward trend line, a breaking of the S1
is a secret
1640,
source.
and for the precious metals price to start aiming
So yeah, yesterday,
actively,
due to that
if not even
news, I
testing,
immediately
the 1650.
shorted Euro USD.
So that should be it from all of us here at
You can
IronFX.
take a look right here
Best
on the
wishes
1
for
minute
solid
chart.
trading.
So I'm usually on the 1 minute chart.
Welcome to another of our videos. Today we'll be looking at a gap. So, what is a gap? A gap is an area on the chart where the price of an asset moves sharply up or down. There is little or no trading in between. As a result, the bar or candlestick chart shows a gap in the normal price pattern. Traders can exploit these gaps for profit. Basically, gaps occur because of underlying fundamental or technical factors. Gaps can appear in the forex market, but they are less common than in other markets because currencies are traded 24 hours a day, 5 days a week. However, gaps can occur when economic data is released that is a surprise to markets. Also, gaps can occur when trading resumes after the weekend or a holiday. Although the forex market is closed over the weekend, the market is still open to central banks and related organizations. So it's possible that the opening price on a Monday morning will be different from the closing price from the previous Friday, which results in a price gap. The difference between the open and closing prices is the gap. If Monday's open price is higher than Friday's closing price, the price gapped up. If Monday's open price is lower than Friday's closing price, the price gapped down. There are 4 types of gaps. The first one is known as a common gap, which represents an area where the price has gapped. The second type is a breakaway gap, which occurs at the end of a price pattern. It signals the beginning of a new trend. The third type is a continuation gap, also known as a runaway gap, and occurs in the middle of a price pattern. This gap type signals a rush of buyers or sellers who share a common belief about the price future direction. And the fourth type is known as an exhaustion gap, which occurs near the end of a price pattern. It signals a last attempt to hit new highs or lows. Thank you for watching.
So yeah, and
everyone, my name is Emily and today I want us to pick up from where we left off. In this second video, you will learn about the advantages of trading CFDs as well as some of the possible disadvantages. Trading CFDs has several advantages. Traders can trade both long and short positions. This means that they can benefit from both rising and falling markets. Also, investors can trade using leverage, meaning that they can trade with a bigger amount than what they have initially deposited in their trading account. This may increase profits but also risk. Moreover, CFD trading allows for fast execution and low transaction costs. It also requires no physical delivery, which limits the risk of worrying about the asset. Last but not least, there are no day trading requirements. In fact, there is a variety of trading opportunities as brokers nowadays enable traders that are into diverse financial paths to trade CFDs as an alternative to exchanges. However, you should keep in mind that CFD owners have no voting rights as they don't own the asset. There is also some risk involved when trading with leverage. Both potential profits and losses are magnified. Also, the ease of access and low transaction costs may sometimes lead to overtrading. Some other disadvantages include the potential lack of liquidity and the need to maintain enough margin. Thank you so much for watching us today. Stay tuned for more videos. Bye-bye.